You know how everyone's chasing JEPQ and QYLD for income? All the FIRE and income investors, they love JEPQ and QYLD. And yeah, I was there too. I held them. I collected those sweet monthly dividends. But I've officially moved on in a pretty big way. I found an ETF that's blowing both of them away. It tracks the tech sector, and it's currently yielding around 14% and has outperformed JEPQ and QYLD in every category to date. It's giving me serious monthly cash flow without aggressively capping my upside, which I love. So stick with me today. I'll reveal exactly what I'm buying all day and why I left JEPQ and QYLD behind. Alright, welcome back, Rico here. This has been a game changer for me, and I don't like to use that word because it means a lot, but this ETF, and more so the creators, have changed the game for me. So, in this video, I'm going to cover a few things. One, why I left JEPQ and QYLD. Two, we're going to cover the history and growth of this ETF since it launched. We're going to go over the year-to-date total returns with dividends reinvested compared to JEPQ and QYLD. We're going to look at the dividend yields, and then, total return performance over the last year. So we'll do year-to-date and over the last year. And then why this ETF maintains strong income while being tax efficient. Now, don't get me wrong, I used to love JEPQ and QYLD. They were my go-tos for reliable monthly income for a few years there, especially once we were in the pandemic and things like that. But over time, I started to see some cracks. And I want to talk about why I moved on. And for one is the capped upside. So JEPQ and QYLD kept me from fully participating in a lot of those tech rallies. They also had flat dividend growths. So their income stayed relatively flat. When inflation hits, a flat dividend actually loses value. Remember, inflation, it's high right now, but typically it's around 2% every year, 2 to 3% every year. And then tax efficiency. Distributions were mostly taxed as ordinary income. And if you're in a taxable account like I am, that hurts. It hurts. And I needed something better. I wanted monthly income. I wanted tech exposure because I'm a tech guy. I was in tech for my entire corporate career. I wanted growth potential. So I wanted to be able to see stock price improve. And I wanted more tax efficiency because I am I'm not the highest tax bracket, but I'm not in the lowest tax bracket either. So looking at those things, that's when I made the decision to move. And that's where I found my answer. So this ETF I'm buying all day, probably no surprise, is QQQI, the NEOS NASDAQ 100 High Income ETF. Now comment down below if you're a fan or not of QQQI. I'd love to hear from you all. So let's talk a little bit about it. It launched officially in January of 2024, and it's been gaining serious momentum. I've been buying it not that long. I kept my eye on it for a while. Not to mention, oh, by the way, it just won the 2025 Best New Active ETF Award presented by ETF.com. And this isn't just me saying it's good, it's been recognized by the industry. So here's what makes QQQI stand out for me. The biggest one probably is the NASDAQ 100 exposure to tech. Companies like Apple, Microsoft, Nvidia, Amazon, Meta, Netflix. Secondly, it's a call option ETF that lets me capture more upside than JEPQ and QYLD, and mainly from the strategies. JEPQ and QYLD, they also do covered calls, but the overall strategy with NEOS has outperformed both, and we'll go over that in a bit. And then there's built-in downside management via convexity, which allows QQQI to give up a little upside to protect more on the downsides, especially during sharp corrections or if volatility spikes. Meaning you won't be riding the full roller coaster down like you would with QYLD or JEPQ. There's some protection there. But yes, you are going to give up a little bit of that upside. And then, like I've been talking about, the tax-efficient structure using the Sections 1256 contracts, which we'll go over later. It's the perfect balance between income, growth, and tax efficiency. Okay, now let's go break down the head-to-head performances. So when we're talking about year-to-date total return, remember this is including dividends reinvested. So that's how it's calculated. Total return is inclusive of price performance as well as the distributions being invested. I want to make that clear with you all. So the calculation is all in. So QQQI year to date 7.33% up 7.33%, JEPQ up only 1.97%, and QYLD is actually down 2.43%. Now QQQI is outperforming both funds in a big way. These total return numbers pretty much tell the story, but we'll dive a bit deeper. Also keep in mind, with the better performance, you're also getting more tax efficiency. I know I keep pounding on that, but it's important. I don't want to have to pay as much in taxes later. Now, QQQI is not just positive, it's significantly outperforming both JEPQ and QYLD in year-to-date returns, but check out the one-year returns also. So again, this is including dividends reinvested. So QQQI is actually up 14.33% over the last year. JEPQ is only up 8.68%, and QYLD is only up 6.35%. Insane. If you think about that, over the last year, that's what these ETFs return. QQQI is dominating both JEPQ and QYLD, and that's amazing. It's almost doubled the returns from JEPQ and QYLD. Now, let's not just talk about returns, let's talk about 12-month dividend yields, because we want to know how much are we getting paid for our investment. So trailing 12 months, QQQI, 14%, JEPQ just over 11%, and QYLD is pretty close, coming in there at 13.45%. But when you're looking at total return, there's NAV erosion that's happened in QYLD, and so why the total return is not as good. So QQQI is delivering higher income than JEPQ. It edges out QYLD, plus it's doing much stronger in price performance. So, I don't need to convince you. I'm not here to convince you. This is not advice. This is what I'm doing in my own portfolio. So I had to put that disclaimer in here. Remember, this is not investing advice. This is just a dude on YouTube talking about what I'm doing. You don't have to follow what I'm doing. Do your own research, please. But I do want to sum it up for you. So QQQI is crushing JEPQ and QYLD on total return. It offers a higher dividend yield than JEPQ, and it beats QYLD in both performance and tax efficiency. It's just a winner across the board. And now I want to go back. I know we talked about tax efficiency, but this is why I really like QQI. This is why it pulls away. So it uses the 1256 contracts, which qualify for 60/40 tax treatment, which means 60% of the gains are taxed at the long-term capital gains rate. And then 40% of the gains are taxed at your ordinary income rate. And if you compare that to JEPQ and QYLD, their covered call premiums are taxed at 100% ordinary income. So that means if you're in the highest tax bracket, you're getting full tax taken out. And so let's look at it, why it matters. So with JEPQ and QYLD, you're taxed at your highest marginal rate. So with QQQI, you get a blended lower tax rate automatically, even if you only hold it for a few months. So let's go one level deeper and give you an example on how this works. So if you're in the 32% tax bracket, highest tax bracket, JEPQ and QYLD distributions, they're going to be fully taxed at 32%. So you're going to pay a max. But QQQI distributions, the effective tax rate is closer to 23% because of the 60/40 split. So that's money you can actually keep. You want to hold on to. And if you're an income investor like me, you want to hold on to more of that than you. So needless to say, but I want to reiterate why I'm so bullish on QQQI. We looked at the big metrics. Granted, we could do an even deeper dive. And if you want me to, comment down below. Tell me what more you'd like to see. Let's review. Top total return year to date at 7.33%. That's more than JEPQ and QYLD. Strong 1-year total return at 14.33%. Almost double JEPQ and QYLD. It has the highest monthly income at a 14% dividend yield. It's tax smart distributions using the 60/40 treatment. It won ETF's 2025 Best New Active ETF Award, and then it exposes you to tech without capping your upside as aggressively. QQQI is doing exactly what I want. It's giving me growth, it's giving me income, it's giving me tax efficiency, and it's been recognized by the industry. And that's why I'm buying QQQI all day, unless of course another great covered call income ETF comes along that can sway me. And comment down below if you might know one. I know there's lots out there, QDT, there's Roundhill, Defiance, there's so many out there. So yeah, I've officially left JEPQ and QYLD. I'm all in on QQQI. What about you? Are you holding JEPQ or QYLD, or would you make this move? Let me know your thoughts in the comments down below. I'd love to hear your take, whatever you're doing. Let's have a conversation. If this helped you out, I'd love it if you could smash that like button, subscribe, and remember, if it doesn't challenge you, it doesn't change you. Thanks for watching, take care, and I'll see you next time. Boom.